This is Lydia. I hope she clicked on. All right, so we are live. Welcome everyone. So we have Ake. And Ike, tell me the best way to pronounce it. Is it Ake or Ike?
AK.
Ake.
Yeah.
Ake, yeah, you're eating good though.
Look at you being a sly MF.
Yeah, I think what's happening now?
My brother, I've been in Nigeria too long.
I'm just supposed to be in the middle of a round. You're supposed to be stressed out.
Bruh. I am or I was, I don't know.
Uh, all right.
But it's not showing
Welcome.
on my face.
Welcome. We're expecting Lydia to join us. Maybe as we go on to, I know Akin has to leave at an hour mark. We'll get some more people on. So welcome. Today's show we are talking about uh the financial markets, Wall Street versus hedge funds versus retail investors. But just to run down real quick how everything works, we'll just me and Justin will give our opening, and then we'll leave the floor for our guests. Our guests are free to give us their opening, and then as we go on, everybody just it's a discussion. It's serious banter, so it's not an interview. We're having a conversation. Think of it of video clubhouse. Everybody wants us to go to clubhouse, but we're keeping the status quo because we need this. We need people to be able to go back and see what we discussed. But this should be a very interesting conversation today. Um, I invited uh, Shamat or whatever his name is, but my network is not that long yet. So today we should have fun. So in the intersection of stocks, other investment of things and crypto. So we have Akin as well. So this should be fun. We're expecting Lydia. I don't know what's happening. So Justin, what are you how are you doing first, and what are your expectations for today? Justin, we can't hear you. There's something wrong with. Mm.
No, we can't hear you.
Justin, we still can't hear you.
Wow.
Let me send a tweet out. I'm sending the tweet. I think I'm going to tag you guys. If you can please, if you can please tweet so your folks can know that you're live with us. Let me send a message to Lydia. Justin, are you there?
Yeah, how's my sound now? Can you hear me now?
Yep.
Yeah, we can hear you now. We can hear you.
It's better now. Okay, sorry.
Yeah, that's good.
Must have. Okay. All right. Hi, Akin. Hi, AK.
Hey,
How's everyone doing?
How are you?
Well,
Doing pretty great.
back,
Good.
I'm back from the moon. We all mooned last week, thanks to the likes of AK and Co that give us channels to circumvent
Okay. Oh yeah, please. How much are you dropping? Well, help your voice. Help your voice.
I swear to God.
Talking about dropping, I heard some news on the grapevine. We'll take it after the show.
Hey, you are hearing this news very late, so
Eh.
no, but we
I,
can
see,
we can still take
see
it
how
up
you
after the
aired me.
no, no,
See how you
no,
aired me
no,
in
no,
front
no,
of the
no.
whole world.
I cannot do that. We can talk after this, I promise. We'll find a way
Alrighty.
to rough up.
No wahala. No,
I,
go
I
rough
like
am. Go rough am.
I like how you use that. You had this news late. I'm going to start using that now.
No, Allah. But Bola,
And
you're you're cooking something in the education space, yeah.
Nah, don't worry now. Don't shout now.
after he'll come and tell us we head late.
You've given me the template. I mean, let's get going before we lose our time. Oh. So, just what are your expectations? You know, we're covering everything today, from not
Yeah.
everything, but from crypto to stocks. The market, everybody just, it was a takeover, if you can call it that, or attempted coup. So,
It was
what else?
seriously an attempted coup. Yeah.
What?
I mean, yeah, but I finished.
Yeah, I was saying what are your expectations for this conversation today, and so we can get our guys to dive in.
Well, I'd like to look at it from the angle of this being a continuation of the conversation we had with Akin and a few other people, right, last year on DeFi, because it segues very well into the context of what happened last week. So, where we had been led by the nose to believe that the market is a free market, even though personally I've always had my opinions about the concept of a free market being an illusion, right? We saw it play out in the past 10 days, thereabouts, with, for lack of a better term, what happened in the stock market. So for me, this conversation is let's look at these issues again. How much access do retail investors really have to the stock market? How much of it is controlled? How much of it is an illusion? How much of it is us being plugged into the matrix? And where does DeFi play into all of this, right? Decentralized finance. Where does disintermediation of the middleman play? So for those who might be not aware of the details in the audience, so retail investors realized that certain stocks were being shorted on Wall Street. GameStop.
Explain short for some of us that don't understand what you mean.
Okay, shorting basically is placing a bet that the price of a share is going to fall and then doing a derivative trade on top of that to try and keep it simple. So you expect that the share of GameStop, for instance, is going to drop next week. So you go to your broker today and you borrow shares at today's market price and then you go and sell them. And when the price drops, you settle that trade, right, at a much lower price. Without becoming too technical, in summary, that's what shorting is. And even though it's a market mechanism that is legal, it's, in my opinion, it's become very unethical. So in the case of GameStop, 140% thereabouts of the floated shares of GameStop was shorted. And this for me is reminiscent of the 2008 Wall Street market crash, right? Where subprime, this is just subprime all over again, right? Subprime mortgages were being sold, derivatives were being sold off of basically nothing. You were building something on top of nothing. And that's what shorting over 100% of a share is. Hi, Lydia.
Hi, y'all.
You know,
Sorry. Technical difficulties.
Yeah, it's okay. It's okay.
it's
Hi,
okay.
Lydia.
We're glad to have you.
Hey, Akin. How are you guys?
Pretty
Everybody's
great.
fine.
We're good, thanks.
Good. Justin, nice to meet you.
Same here. You know, so like I was saying, when people realized that GameStop was shorted so excessively, someone somewhere had a brainwave like, let's put the squeeze on these guys by holding the stock. When you hold the stock during a short,
Reddit investors.
yeah,
Or
well, everybody's talking about everybody's talking about the Reddit community, but I'm pretty sure that it extended beyond them. But I mean, they were the tip of the arrow with what happened. So prices started spiking, and then what happened? Basically, the establishment started trying to change the rules in the middle of the game, started shifting the goalpost. Suddenly, retail apps like Robinhood and Co. went down. Um, Ameritrade and Co. went down for people stateside. For those of us in Nigeria, using some of our own applications here, who are dependent on brokers offshore, you found out that your brokers were also squeezing you, right? Throttling the trades. Initially, people were reacting to, the app that they're using, but then your app is an interface that's dependent on the back end. And when the back end is shutting you down, there's really nothing that people like
App is
Eke and
just a
Co
dealer.
can do. Exactly. So essentially, Wall Street came together and decided to shut down the retail investors, limiting trades, putting quotas on how many shares of a stock that you could buy. All of this basically to do what? To force prices down, to prevent people from buying. And then in some cases, I don't have a personal experience here, but I heard and I saw some screenshots of people claiming that I think it was on Robinhood that their shares were sold by fiat. Some people's GameStop positions were actually sold. Now, I could conjecture that
Is
that
that
may have been people.
possible? Is that possible?
If you were trading on margin, it's feasible that they could take that position, right? If you used a margin line to take those positions, the trading house could actually sell it by fiat. But the bottom line here is we saw a reaction that basically tells us what we've already always known, that this free market is not free. There's there's a hand that rocks the cradle, and if you poke the beast will poke back. So for this conversation, I'd like us to talk about this. What hope do we have, right? That these kind of things. I don't think the market is ever going to be the same again. This was an epochal event, right? It's a watershed in history. Things will Nobody
Well,
will assume.
I don't think so. I disagree with you there.
Yeah, I
I
want
mean,
to push back. I push back
that's
on
what
that
we're
as
here to talk
well,
about.
Justin. We've seen this.
We'll
This
talk
is
about
not.
that.
This isn't new at all. This what's the only thing that's new about this is that the retail traders actually won, actually did the
Yep.
pushing. That's the only thing that's different. Usually it's the reverse. Usually it's the
Yep.
hedge funds who are squeezing us out of these markets. So
Mm-hmm.
nothing has changed. The only thing I hope people take away is don't be greedy. So I had clients calling me and texting me last week. I have GameStop. What do I do? And I looked at the chart so I can read charts. Most of my clients can't or don't. I looked at the charts and I said, sell it, sell it, sell it at 350. At least sell it above 300. And then I'm on Clubhouse and I'm in these rooms. I don't know if y'all were seeing the stonks rooms and all these different rooms on Clubhouse, right? So I'm entering these rooms and people are like, this is gonna go to 1,000. This is gonna go
To
to
the moon.
so I'm
Ah,
like, well, did I just like leave money on the table? Did I give people bad advice? The very next day it dropped to 250 and now right now it's at 100, right? So one thing I say is that technical analysis is real. It works if you can use it, if you can read a stock chart for real and not use your emotions. And two, we're gonna see this again. It's not going to change the market. I mean, at the end of the day, it's people should spread. Maybe you'll have less confidence in your broker. Maybe you won't have all your money in one broker. Maybe you'll spread your wealth across different accounts. Maybe, but I think we'll see this again, and it won't change the underlying mechanics of the market. Like this behavior won't change the underlying mechanics.
All right. So,
Akin, what do you think about that?
um, so I think there needs to be some context historically, right? So during the mortgage crisis, um, the banks took a lot of leverage. They created bad products, and they sold their products to the customers, and then they insured their obligations, right? So the majority of the bailout went to AIG, and AIG had written basically credit default swaps, which are just insurance policies. So the banks had taken insurance from AIG. AIG was left holding the bag. They didn't really know what they were insuring. when it comes down to it. But more than anything else, all the banks got bailed out one for one. Right? Now, in that same scenario, there were people who had been sold mortgages fraudulently. So it's not just that you took a mortgage and you got greedy and you bought a house that was too big. You had mortgage originators that fraudulently sold mortgages that they shouldn't to people who didn't really understand the fine print. And in the end of the debacle, lots of people lost their homes. Now, you have to understand that during the financial crisis, a lot of the people that you're seeing in these Reddit chat rooms, maybe they were in elementary school then or middle school, but they had relatives that lost their homes. They might have lost their own homes. They had parents who lost their jobs. So that was like their first sort of like, I'm a teenager and I'm kind of getting a sense of how things work. Now, after the financial crisis, a big sweeping law was passed called Dodd-Frank, right? Dodd and Frank, two senators. And it put a lot of restrictions on what banks could do, where they could invest people's money. If you're a commercial bank, you can't take certain risks. It kind of tightened, to a large extent, many of the holes that existed. Now, okay, fast forward to 2020, right? We have coronavirus. You have monetary expansion in the US between, depending on who you ask, between 25% and 50%. So basically, of all the dollars that ever existed, 25 to 50% more was printed last year. Most of those funds, right, the way the banking system works, funnel from the top, from the Fed balance sheet to banks' balance sheets, right? The Fed does that by buying all sorts of assets that the banks might hold. So all of a sudden, the banks go from these liquid assets to all this cash. Remember, banks can't misbehave like they used to before. So how are banks now deploying that capital? They're not giving it to the restaurant on Main Street that doesn't have any customers because coronavirus has locked everyone at home. The bars, no one is going to, because those are not really viable businesses in the short term. So where's that money going? That money is going to prime brokerage relationships. So as a hedge fund, you can get access to a prime broker, which means basically that you can put some equity in, some of your own cash, and the bank will give you a line of credit. In many instances, Melvin Capital, the fund that basically got caught on the other side of that GameStop trade, from what I've read, Melvin Capital had as much as a 10-to-1 leverage ratio. So I put $1 billion down.
Are they the ones that gave Robinhood $3 billion?
No, that's Citadel.
Okay.
So Melvin Capital is a hedge fund that basically is a subsidiary of a much bigger hedge fund. They have a relationship with Citadel, which is much bigger. But the point is, Melvin Capital could take $1 billion and then borrow $10 billion against it, right? So you have all this liquidity in the system. And so what effectively happened was all the holes that were plugged in the financial crisis, they left the hedge funds alone, right? Hedge funds don't have to disclose their positions. They don't have to disclose what they're doing. So that's the dark side of the market. So money now moves where the sun isn't shining. And all of a sudden, a lot of the behaviors that we saw during the financial crisis are still going on, but in a much more opaque environment where even the regulators don't have as much visibility into. Right? So you now have the hedge funds with all this amount of capital, right? You have a market where lots of businesses are not going to do well in the short term, right? No one is going to like retail stores. No one is going to movies, right? So those businesses.
So it's convenient to just easily start picking the ones to short because it's
right. Because in the short term, you can short those stocks because at least for all of 2020, their revenue situation looks bad. Now the business could be great in 21, 22. Investors might say, I'm willing to wait, no problem. This is still a fundamentally good business. But in the short term, right, what oftentimes you can do as a hedge fund is if you short something enough, you can basically like short a good company into bankruptcy, right? Because you have to remember, the equity of a stock is their currency. If I'm a company and I have equity, it's worth something. I can borrow against it. If my equity is shrinking, for example, let's say I have debt obligations as GameStop, right? Let's say my equity is $1 billion and I borrowed $500,000. And that's a healthy position, right? My equity can cover most of my borrowings. But if all of a sudden my stock price starts dropping, my equity position looks poorer and poorer and poorer, I might have covenants, right, with my debt provider that says,
I can hold on a second, please. If it's possible for because we are getting feedback, if it's possible for anyone to, if you have a headset, please wear. I think we are getting a feedback from somewhere, or just try to mute.
I
But if
think
you have a headset, it will be a little bit better.
I think
And I also wanted to ask a question.
Yeah. So the point is, if the value of the equity is falling as a company, in the short term, you're not getting the revenue, so your earnings are declining, but you still have debt on your books. At some point, if your equity drops far enough, your debt holders might say, "Hey, you're insolvent," or "You're in breach of the debt covenants that say you have to have so much equity against my debt." And so what can happen? Your debt holders can basically call that loan. You don't have enough equity or cash on your books to pay, and you're effectively bankrupt, right? And your debt holders can basically take over your business, right? Because it's like, hey, right? Because senior debt is the first priority. So if you think about what's going on in that situation, you can literally have a scenario where a hedge fund takes money, borrows more money, shorts a stock to death, covenants get called, right? That company effectively becomes bankrupt. Debt holders now take over the company, where without that behavior, the company might have survived, just managed, laid off some people, right? 2021 comes back, virus is being handled, people are now buying games again, right? So in some ways, like, it's manipulative, right? You can literally manipulate a stock to oblivion. And then the irony about it, which actually makes it worse, is that on one hand, right, I can be shorting a stock down such that it's going into bankruptcy, right? But through another vehicle, I could go buy up their debt. Literally. So all of a sudden, I kill the company in order to acquire it on the cheap. Because if I'm holding the debt, I now take over the whole company. I can now wait, restructure it. Come 2021, oh, business is good again. We now inflate the value, things are moving. And then all of a sudden, the hedge fund says in 2 or 3 years, oh, I'm selling this company for 5 times what I bought it.
Alex.
Right? We don't know the nature of all these relationships, because at the end of the day, there's a guy on the top, Citadel, whoever it might be, that has money in all these buckets.
Definitely.
Right? They have money in the short guys and the debt funds, and they can literally control, right? And in a scenario like we had in 2020, which was unique, right? You had a lot of people trying to manipulate things in such a way that they had the capital to do it. But ultimately, where I want to land is that the finger should always go and point back to monetary policy. Because at the end of the day, the Fed in 2020 made money very cheap, right? By just having all the supply of money. It crashed fixed income because you now have negative yielding treasuries. So money has to go somewhere it's getting a return. No one's going to put money into a vehicle where you're losing value every day. So equities become a crowded trade, right? Folks that rather have gotten 4%, 3% in fixed income now have no choice, right, but to get into the equities market, inflate that market, and you now have all these dislocations happening, right? So ultimately, could the Fed have taken a different tack to how they were spreading the money that was printed in 2020? Well, yes, they could have. Rather than, and a simple example, right? In the first bailout, where I think there were checks that were given to certain families, got like some money, but the vast majority of that bailout went to the top of the funnel through the banking system.
Yeah.
The Fed could have said, you know what, we're not doing it that way. We're giving every American family $10,000. They could have done that. And what would that have done? When families on the bottom receive money, what do? They spend it. So ultimately, that money would have found its way back into the system, right? People would have spent it. The same companies that you gave the money at the top would eventually have received it, right? Because what goods are you buying? But the problem with that is that you get inflation showing up a lot quicker, because the consumer price index will jump a lot faster if people have money and they're spending it, right? If they save it, it's a different story. But the one thing if you give the banks the money is that you can kind of almost trap inflation in different kinds of assets. And to a large extent, the Fed is between a rock and a hard place, because if inflation catches up too quickly, then the Fed will have to raise rates, right, to kind of slow it down. And if the Fed raises rates, then how are you going to pay for all the debt you just issued? Because all of a sudden your cost of issuing debt also jumps. So you're in this kind of conundrum where $24 trillion of debt outstanding at the Fed is that we have in the US, someone's got to pay for it. And if the interest rate environment is way too high, how do you refinance that debt? Right? So there are a number of dislocations that basically have happened that ultimately, in my view, monetary policy is to blame. And the secondary blame is poor regulation. Why are hedge
I,
funds not regulated? Why do we not know
I,
what they're doing?
okay. So real quick before AK we'll jump in real quick, but it's so important. It's so pointed because AMC is movie theaters and people are not really going to theaters right now, so they're not doing good business. GameStop, I know people are playing a lot more video games, but I guess they're probably doing it online. So the physical stores are suffering too. So those are very easy targets, I guess, for shorts. But I can you've maybe we'll come back to the crypto angle of this because some action happened with was it a Dogecoin, and they make your case for decentralized finance. But I know AK has been trying to jump in, so please jump in. But yeah, hey, another thing, we didn't have introductions, so the next rounds when people talk, please introduce yourself. But we'll start with AK. So introduce yourself. Tell us what people want to do. Towards the end of the show, we'll give you another opportunity because a lot of diaspora folks watch this stuff. A lot of people that want to have assets in USD watch this stuff as well. So you'll be able to sell your market. But at least just
Awesome.
give us a brief intro, real quick.
Yeah, I actually was enjoying what Akin was talking about. But yeah, so my name's AK Oram. I'm the founder of RiseVest. And what we do is we essentially allow everybody to invest across the US in equities, fixed income, and real estate through an app. So we're in the wealth tech space in Nigeria. Hopefully, we'll expand beyond Nigeria very soon. You can check us out at rise.capital. But yeah, what I wanted to add to the conversation was essentially um, first, Akin is right. Monetary policy is kind of driving a lot of what we're seeing right now. But I also don't think there's a lot that, if I had to think about this started from maybe 2008, really, when we got into this whole zero interest rate environment, right? And part of the reason that the Fed during the pandemic um, increased their balance sheet so quickly was because um, a combination of, well, Trump administration and even the Fed themselves not wanting to see a collapse. And the reason that they would give it to a lot of the banks, they did small handouts to retail people, which still somewhat ended up in the stock market. But really, the reason they give it to these banks is that a lot of the liquidity in the system ultimately can be traced all the way back to them. Secondly, when you give money to these guys, there's a lot more of a multiplier effect, right? That you don't see if you gave it straight to the retail guys. However, it's still a problem. I don't know what it's going to take to solve this problem because, in as much as there's a macro aspect to a lot of these things, I tend to focus a lot more on the micro, right? So, for the micro level, the retail guys started the fun. My feeling is that there's a bit of that's why I say Citadel is definitely in the mix of all of this because when you started seeing a lot of the activity as they started pushing those shorts, um, you see a lot of houses that said automatic trades, high frequency trading, a lot of things that are kicking in, driving all of these things haywire, right? So right now, all the rules left the building. Nobody is really sure where any of this is going to end, and just as we've seen AMC do what the AMC, GameStop, we're definitely still going to see a lot more of these activities going forward. But it's not new. It's not that new. It's market behavior. It's a lot of free money. It's a lot of easy credit. It's a lot of retail like outlets now. And so we have new people jumping into the market and doing certain things that now it's super easy to do. The last thing I want to see as far as observations go is that the only possible way to check some of these is if market makers like Citadel and regulators start limiting the kind of people or the kind of trades that people can make. Shorts, I'm fundamentally against. One, because it's too high risk. It shouldn't be available to anybody. I think Robinhood now, if you put up to like 5,000, I don't know what the amount is. Now you can allow a short. They need to rewrite the rules so that only certain kinds of players can do certain things on the stock market, while everyday people can just do conventional, normal trades and stuff. That would limit a little bit of this. But I even
AK, can I push back?
yeah, sure.
Do you have any kind of restrictions on Rise?
Well, first of all, Rise doesn't allow individuals to trade directly, right? So we build out an index of stocks that we have a very strong conviction in, and then we allow you to fund directly into that portfolio. So the reason we take that approach is that, again, retail traders tend to trade on what's hot or what everyone's doing without really considering either the fundamentals and the long-term positions that they're taking. So we try to limit sales, but we are seeing apps that let every single person, jump in and start buying and selling, trading options, doing really complicated things. And to me, it's just a fundamentally bad idea.
And how well have you guys been
How
doing
how much
against the market?
Last year, we did 40.7% versus S&P's 16.2, I believe, somewhere in that neighborhood, right? The year before, we did right neck and neck with S&P. S&P did 30%. We did like 29.8. So it was roughly the same. But that was also when our stocks portfolio was still in beta and we're still working out a lot of the algos that we use for our decision making. But 2020, we blew S&P way out of the water. So far in 2021, it's too early to tell. But again, we don't even care about that. We just care about the quality of assets that we purchase. And once we stick to that, we let the returns figure themselves out.
All right, I want to jump into just one quick comment. I'll let Lydia jump in afterwards. But I think
Introduce
fundamentally.
yourself.
Oh, sorry, Akin Sawyer. I'm on the core team of Barnbridge. We are a decentralized finance protocol that allows people to get access to just structured exposure to risk. So you can get
guys, please mute.
That's a lot.
Yeah, so fixed income assets, but we have ways that we can basically tranche risk and essentially customize the exposure that people want. It's not too different from what a lot of Wall Street fixed income houses have access to today, where you can build structured products, you can get structured risk, you can use hedging tools to sort of manage your position. The difference is, we operate in fundamentally open and free market. And what that means is that everyone has the same access, but more importantly, the rules that back decentralized finance are mathematically secured and are transparent. So you can't change the rules, right? If a hedge fund wants to trade and play in DeFi, they play with the same rules as the guy in his basement who has, figured out some really smart model and can outsmart the bankers, right? It's a fair playing field. I think to take one of the points AK was making, anytime, in a marketplace, you have a regulator or an entity sort of compromising the rules or picking winners and losers, you're setting yourself up for trouble, right? And the fundamental problem we have with financial markets, that's been a problem since the beginning of history. So the one thing I agree with everyone is, like, a lot of this stuff has been going on for a long time. Anytime you have a principal-agent relationship, right? So I'm the principal, I have the money. The stock trader, the bank, that's the agent, right? That the intermediary I use. Anytime, and it's a fundamental law in economics. Ronald Coase won a Nobel Prize for this theory. And the basic is that when you have a principal-agent problem, at certain points in time, when an agent has to make a decision, whether he's going to protect his principal or protect himself, he'll always protect himself. Like, just from a moral position, you'll save yourself before you save that third party. But what makes it worse in America is every time the agent has screwed over the principals, which is the taxpayers, they've been bailed out. Right? We've seen it over and over again. All the financial crises we've seen from 2008 to the thrift crisis in the 80s, like every time. And so in a repeated game, right, the non-economic term, once you've seen a game happen once, and then in short order, so 2008, 2020, that's short order, and you see it happen again, it tells you as, you know, the regular guy in the market that this market is rigged against me. Now, historically, you had no choice. There's only one market, right? You buy real estate, you buy stocks, like everyone plays in the same market. The difference in 2020 is people have an alternative, and that's decentralized financial protocols. Now, it doesn't mean everyone's going to go into crypto. The point is you now have a choice to say, look, here's another market developing. I can see the rules. I can verify the rules. I can understand them. I can quantify the risks, right? The thing is ultimately is in DeFi, everything is on chain. Anyone that has the skill set can verify everything, mark to market, day to day. In the traditional financial market, there are lots of areas that are dark caves and you have no clue what's going on. Even the regulators don't know on a day-to-day basis, right? They follow whatever reporting cycles. And so you end up having a scenario where in a market that's totally open, where everyone knows everyone else's position, you can kind of say, okay, we know where the risk of the market is. I know who's doing what. And in sum total, I can see here's the risks that exist in the market. In traditional financial markets, we don't know.
Do you want to say something? Because I kind of want to say something else, but I remember like you say you want to go first. So.
Yeah. So my name is Lydia Edom. I'm an investment advisor, also an investor. We work with angel investors and individuals and syndicate them into deals at the early stage. We also do in Africa and Latin America. We also do traditional asset management. And I got into this because I started off, I've been investing in mutual funds and stocks for a long time. But Forex trading is where I kind of entered my career path. So I invest in all the asset classes. So I want to push back on some of the things that have been said too. So to Eke's point about, it's not even Eke's point, but I'm one of those rare traders who I feel regulations is too much. People should be free to lose all their money. Okay. People should be free to short the market. They should be free to buy the market. They should be free to play options. If you are investing, they should be free to invest in startups. Okay. So if you are invested in things that you don't understand, that's your bad. You shouldn't be doing that. You should be investing in things. You should be buying things that you understand and that you can make money in, right? Because you understand what you're buying and you understand how to get out of the market. So I'm one of those. I don't like all of this regulation, all of this keeping the little person out, all of this. I think it's nonsense. So we are very over-regulated. It's my money.
It's our
And
money.
Free to lose it.
Okay. So
right?
in that same vein, in as much as you don't want regulation, so when the market goes and go and cause trouble and they get burnt, you also don't believe governments should bail them out too, right?
It has a social cost.
Not. I didn't believe that. I'm also one of those who I think markets should crash. Like we should have had a market crash in March of 2020. We should have. We should not have seen the Fed step in that way. The market should have crashed. I believe in free markets because free market crashes are opportunities. Okay, yeah, you'll lose some money, but then I can buy. You know, how many of us have been waiting for the last like maybe 3 years to buy into the market, right? I mean, so I'm really like it's because we live in a very litigious society, particularly in America, that we have all this regulation because people want to sue when they lose money. Well, stop buying things you don't understand. Don't invest in a startup. You're going to you can lose all your money, you know, or don't invest in real estate. What are you doing? So like, these are the things like I think there needs to be more education as opposed to all the regulation. Let's have finance as a course from kindergarten to college. How about that? And then people can make better investing decisions. So that's just one thing. I think that we should be able to have short sellers. I mean, if we're not going to short the market, then nobody should short the market. That's one. The thing that's different in this case is that the retail traders won. That's the thing. Like, we never see the little people win. So I'm here for your Reddits. And the reason why is because we have social media. All right. You know what was announced last week? Citadel is now not going to put out their little short sellers research report anymore, because that's how these people found out that they were shorting GameStop. So now they go further into obscurity because we now can game you all. How you've been gaming us for the last decade. Now we're gaming you, and we have social media to empower millions of people. Right. Another hedge fund owner was on CNBC talking about this is an attack on wealthy people. Huh. When have we ever heard that before?
Lydia, I have a question.
I've heard that one before. Now we're attacking wealthy people? And that's something else. Okay? Pretty soon in America, we'll be shutting down social media because the little people now can talk to each other, and we can galvanize millions to move markets in a way that we've never been able to move markets before. So, I mean, I'm here for Reddit. I'm here for Wall Street.
So
I'm here for
I'll tell you what.
Guys, please mute. Or some sort of. If you're not talking, please mute.
I'll tell you what. Like, for me, I'm a member of Wall Street Bets, or at least I subscribe to Wall Street Bets. And I've been subscribed to that for a long time. I'm all in favor of the little guy. In fact, what happened this past couple of weeks, the professional guys used to do this for fun. Like, they'll figure out where a lot of the short trades are going, and then they'll just freaking pick you guys out of the water one by one. They used to do it all the time. The reason that I figure that, or the reason I believe that there should be some limits to, especially shorts, is there is a limited upside to a short trade, right? But the downside is practically unlimited. Like, you can lose, Jesus knows to what point. Like, there's no limit to how much you can lose.
Okay, so, trading on margin, because that's what it is, and that's why.
Right? No, even if you do,
well,
the thing is, with shorts, you are inherently in margin. So like you said, the way I explain shorts, I use a much simpler explanation, which is I go to Bola, I say, okay, give me your PlayStation, right? Let me your PlayStation is at 400. I know that the new one is coming out. It's gonna drop to 200. So I go sell your PlayStation for 400 today, and then wait for it to drop to 200 and go buy it back. Now the problem is, if I go sell it at 400, I owe you a freaking PlayStation. What if the price doesn't fall, and instead it keeps going from 400 to 800 to 1,000 to 10,000, right? At some point, I still have to pay for that game at whatever price I can find it, because I have to return it, right? If not, then I'm in debt. So shorts by nature is a debt-driven trade. It's a margin trade. And so for anybody doing shorts, you might get the spread between, let's say it falls from 400 to 200. So there's a defined upside, right? Even if it goes all the way down to zero, maybe you make 100% or 200 or 500 or whatever. But once it hits zero, that's it. But the upside, like the other side of it, when the price keeps going up, there's no ceiling. So you can literally, I've seen people who try to short a stock and then end up, even with their Robinhood account, someone's like, oh, I'm in like $1 million in debt. And it's like some guy that has 20K, right? So for me, it's just so lopsided that retail people shouldn't do it. Now, if you're a big guy and you do it, go bankrupt. The other thing I wanted to push back against was, Akin was talking about, and I'm a crypto guy. I'm excited about DeFi. I definitely want to knock heads with you later on about what you're doing. But I also don't think that DeFi is this answer that we make it out to be. It's more exciting and it's more powerful because it puts power in the hands of people, or it disintermediates the current establishment. But there are problems that DeFi cannot solve. And one of the challenges that I have with DeFi, I'm a crypto guy. I know that space relatively. I'm not as into DeFi as I am into like traditional crypto. But one of the problems I see that with economics, with macroeconomics especially, is that there's this sense of false mathematical certainty because we know all the rules and how we place every single thing. We know where the chips are going to fall, which is great. when you're still dealing with abstract stuff. But once DeFi starts trying to solve or connect or manage real life risks, those risks that you see in real life are going to come into the DeFi space. You cannot mathematicize your risk away. You can't hedge it completely away. And so it still comes back down to who's better at it. And at some level, new intermediaries are going to come up because there are some people who are not as good at it as others, and they're going to have to trust the other guys to manage it for them. And so those same agency, principal agent problem that exists in the traditional world is still going to come back into the DeFi world. So that's my other pushback.
I think so. Let me respond to that actually, because I don't disagree with that. I don't disagree with your last statement. You're always going to have some agent, right? There's always going to be a principal agent situation. What I was getting at is fundamentally, right, the underlying information within the market, when you look at decentralized protocols, is open. And that's a massive shift from the current financial markets we have. Like most of the reasons why we've had these big financial blowups and bubbles and like 2008 was because no one had all the information they needed to have until after the system now almost blew up. No one did. Regulators did not have enough reach into understanding what these CDOs were. They didn't have enough insight into how much leverage was in the system. See, the problem is when you have mortgage securities and it's a quantum, right? If I have mortgage securities representing the market, that's one thing. That's a one-to-one problem. There's only so much housing. There's only so much mortgage assets backing it. The big issue during the financial crisis was that any investor could bet against that market. People were piling on leverage to take bets on mortgage pools. So a problem that was a one-to-one problem became a 1-to-5 problem. Now, the money that is owed, right, to all those who bought credit default swaps is 4 or 5 times the size of the mortgage market. Regulators didn't know the quantum of that. If a regulator knew and saw the leverage building up, they would have intervened well before they did. No person would have let that thing grow that big. The problem was market information, right? In a system where you have firms, where you have privacy, where you have all sorts of like hidden things, right? And no one really knows the quantum of the problem. That's where bubbles come, and that's where all sorts of issues like 2008 happen. The difference in DeFi is that all the information is on chain. Anybody can say, hey, here's an asset. I could look at that on chain. I can look at the collateral backing it, and I can verify that. And that's mathematically secure because the blockchain is mathematically secure. You can verify that. Now, if something goes wrong, you can also verify something has gone wrong. So fundamentally, market information becomes not perfect, but a lot closer to perfect information. And with that, it does a couple of things. You know the outstanding situation of the global financial market that sits on top of crypto, right? Every market participant can verify that. So whether it's a Citadel and their clients or Wall Street Bets in their basement, everyone is looking at the same information. So it brings some level of fairness. Yeah, you'll still have people in the market that don't know what they're doing, and they're going to like blow up because they don't know what they're investing in. You'll have others that are more sophisticated and they can see the information and they're making their own decisions. But the core is everyone has access to the same information. And that makes a big difference. Now, the second thing I'll say too is, and we'll go back a little bit, prior to this whole thing happening with Wall Street Bets, Robinhood had been fined by the SEC. I think it was like $65 million. Why? Because they didn't disclose the nature of how they actually made money, right? And the fundamental thing is that there's no free lunch. There's no such thing as if you're getting something for free, as has been said, then you're the product. What way Robinhood basically makes money is all the trade flows that they're originating, they route it to these hedge funds, right? So it's almost like the hedge fund saying, "Oh, here's what everyone on this call wants to buy." You see the order flow coming, and how does Citadel make money? It front runs retailers. It'll say, Aki wants to buy this stuff for $50. I'll jump in front of line, buy it for $50. And then I'll raise the price to $50.02. And Aki is now forced to move his price to buy. And Citadel does that all day, basically using that order flow to basically get 2 cents here, 3 cents here, millions of dollars of trades a day. Robinhood never disclosed that to the customers fully, that, hey, basically when you put your price in your limit order, someone is trying to basically like manipulate the market, which is essentially what that is. And they got fined once. They're still being sued by Massachusetts today. That's still going through litigation. So in that kind of scenario, that's a market where information wasn't fully shared. And that's problematic. Where now certain people have privileged information, certain people have privileged access. Citadel can co-locate their servers right in the NYSC, and literally, because they have speed, can literally get in front of all these trades. So they're essentially putting a tax on the financial system and scalping trades. Like, that should be legal. I think it should. There's no reason why Citadel should basically be getting in front of the line every time I'm trying to trade. And look, I've played the Robinhood app quite a bit, right? I kid you not. Even just with crypto, I put a limit price of crypto. All of a sudden, it's like a game. The price is moving, so I'm now incentivized to raise my price. Like, I don't know how their algos are managing it, but they're basically cheating every retail investor, right? By essentially playing on your psychology, like, oh, price is moving, I should raise my price, raise my price. Meanwhile,
they're front running your trades.
They're front running your trades, and that's not illegal in today's market. That's not right.
It should be.
And,
it should be.
And so it's one. So, but it's on one hand,
Lydia doesn't agree.
But fundamentally, every retail investor, but every retail investor should know that. And Robinhood never properly disclosed that. And that's really where the fundamental problem is. If I know that and I still want to trade, fine with me. But I didn't even know I was being like front run. That shouldn't be happening in this market.
So I'm for people being able to invest their money how they would like to invest their money. I'm not for market makers. Okay. Let's be clear about that. Market, and because I've been in Forex for so long, front running, stop hunting, slippage, price slippage, where they don't want to fulfill your price when you're making money, but then they're going to give you a crazy price when you're losing money, so you lose even more money. All of that is inherent in Forex trading, which is why I invest the way I invest. Because and plus trading Forex is on margin, so you can lose your shirt, you can lose all your money and then some, and then owe the broker some money. So I mean, if you've been in Forex for any amount of time, all of this is just inherent. It makes you become a more defensive and kind of offensive trader and investor. It makes you more patient. So don't conflate. Like, I feel like if I want to be in Forex, or if I want to trade on margin, which is, Forex trading is trading. If I want to trade on margin, I should be allowed to trade on margin, but I better understand what I'm doing, right? But market makers doing all this illegal nonsense, that's a whole other situation. That's a whole other story.
That's not part of free market that you were saying.
No, it is not free, but manipulating the market is not free market. That's not.
You know what? I don't.
I have a few thoughts.
Justin has some questions. Let's have Justin chime in. He has some questions and thoughts.
Yeah. So, leveraging what Akin was saying, right? I'm playing that off what AK's position is. Viz, AK is for control. AK is pro-regulation. That's my understanding. I.e., let's not let the retail investor go all in. He might hurt himself, right? Therefore, that informs your approach to the market. Akin, on the other hand, being a DeFi guy, is saying, listen, the value in DeFi is that DeFi reduces market asymmetry, right? And really, we cannot talk about free markets and market asymmetry in the same where market asymmetry exists. If some player in the same market as I'm playing in has more information than I do, has more insight than I do, then you can't say that's not a free market. And that's why I said at the beginning that I personally think free markets are a myth. And the interest I have in DeFi and what people like Akin are doing is, and I wish, and I'm going to spend more time trying to understand it, because I want to see exactly how it helps us eliminate asymmetry in the markets. Then we can reasonably begin to talk about how free the market is. I think it's a spectrum. The free market doesn't exist. When someone is front running trades, right? When Robinhood, being the biggest retail app, quote unquote, arguably, is selling trading data to a Citadel, and Citadel is using that to front run trades, and you turn around and tell me there's a free market. That's a myth, man. And I decided to take was it the blue pill or the red pill that Neo took? Whichever one Neo took, I took it.
So I guess we need to understand what information are you guys talking about, because
Right.
asymmetry is how we make money in the market. That's how people make money.
Exactly.
Is when I know something
Exactly.
you don't know, and so I buy or sell accordingly. That's how money is made. So essentially, so what information are we talking about? Because to me, if there's no asymmetry in the market, then markets don't move, and then there's no one's making
Let's
money.
No,
So
no.
what exactly are you talking about in terms of information? Because are we talking about fundamental information where I know that, because I'm an Apple user, I know Apple's about to drop something, so I'm gonna buy Apple because I know that, just as a regular person, right? Or are you talking about order flow and market information? Because those things are different. You know what I mean?
I'm talking about, when I say, sorry, Akin, when I say information asymmetry in this context, I'm basically referring to fundamental information, right? So information that's publicly available if you go looking for it to inform your decision making. Now, this is why we talk about insider trading. When someone goes and gets information that is not in the public domain and uses that to inform a trade or inform a position, it's illegal, right? It's insider trading. That's why it's illegal. So for me, market asymmetry, information availability across the board, is simply saying, as long as we have access to the same information, and this is where I'm trying to understand more about what Akin is saying, that if DeFi creates transparency, right? Whether you're doing technical analysis, you don't have any advantage there. The advantage or disadvantage is in your level of understanding of technical analysis. When you switch over to looking at fundamentals, that information should be available. And the opportunities for arbitrage, where people are taking advantage of information that's not available to everybody, in my opinion, should be eliminated as much as possible. Then we move closer to what a free market is. I say this knowing that there's no perfect market anyway.
Yeah, and I think that's a good point. And I think there needs to be a distinction between public markets and private markets, right? The rules in the public market and the reason why you have consumer protection, right, is that fundamentally, if I'm a company and I'm a business, I'm a firm, I can hire hundreds of people, analysts who do this 24/7. I have an advantage in terms of knowledge. Let's just call it that, right? People that do this every day. I might be, white collar worker. I'm just trying to put some of my savings in the stock market. So typically, what would I do? I'll go to some of those guys and give them money because they're the smart money, right? They can deploy it for me. So I have a financial advisor, whatever. But if you notice how public markets are structured, there are lots of rules around disclosures, extremely tight. What information should you be sharing with customers? When do you share that information? Like trying to make sure that everyone gets access to the same information at the same time, right? So when people are putting out, 10 Qs and quality reports, it goes to one system, it hits that system, and everyone can see it at the same time. That's fair. Now, you might be smarter than me, and you can interpret that information because you have better education and make a better decision. That's okay. Like, you cannot legislate intelligence, but you can at least say everyone has the same information. And where you're in a marketplace where, from an informational standpoint, particularly in public markets, right? Because you have to understand the number one actually vector for most regulators in the United States is consumer protection. Fundamentally, we don't want the smart, sophisticated guys taking advantage of the lowly taxpayer. And I think there is value to that, and there has to be some consumer protections. Otherwise, if it's a free for all, as we know and as we've seen, the sophisticated guys will basically crash the system just to cheat everyone else. That's just fundamentally a human behavioral thing, right? And so I think there have to be some protections in the public market where sophisticated guys are playing with non-sophisticated people. In private markets, different story. If I'm not soliciting money from the public, I want to do a deal, and I call my 5 friends online, let's do this deal. Here's the information, let's share it. That's fine. That's between us, right? We can make that decision. But when you now move it to public markets where we're having the same internal conversation, we have all this information, then I go give the guy in the public a tenth of the information and say, hey, come and do this. That's not fair, right? So I think that's kind of like my view of things. Now, what I was saying around as relates to DeFi, to Justin's point, is that all that sense of information, everyone has access to it, right? So I don't necessarily today know that Citadel is doing X, but I can see every transaction on the chain. I could see that some wallet that might be anonymous just took a massive position in something. And I'm like, what is that? What do those people know that I don't? Right? I can potentially see how these flows are going and start making my own decisions just like everyone else. And you can see that to the minute on the market. That to me, I think is fundamentally important because it becomes a massive shift in the ability for a market to function efficiently, right? Because the more information is out there in the marketplace, in the public domain, the more everyone at least has the same basis to interact. Now, it doesn't mean that in that same market, the guy that has 100 million doesn't have an advantage. Of course he does, right? Relative to the size of the market, if you're bringing a lot of money in, there might be things you can do that I can't do with my small bag. And there'll always be some advantage you might have. But you're not operating in a market where you've rigged it such that you, your friends, are in a privileged position. You can do certain things retail can't. You can see order flows, retail can't. You can get bailed out, retail can't. Like, think about that. Like, Chamath was on, Chamath, who's a guy I follow. He's putting all these SPACs, and he was on this. He was on the Wall Street bet side of things, and he said this very eloquently. He's like, look, in the Hamptons or in Connecticut, where the hedge fund guys are, they have all these parties where they literally get together and decide who are we shorting next week. And when you have in some quarters in America 10 guys in a room, some of those 10 guys could have $100 billion worth of capital coming to the market on Monday. How am I going to compete with that? And it's legal. It's legal for those guys to basically not only collude amongst themselves, make certain decisions and gang up as a group, but beyond that, they also have other advantages in the market, being able to front run, being able to execute faster, being able to execute high frequency trades, being able to sit literally in America, like if you're a hedge fund, your server is at the NYSC, right next to the NYSC servers. No one is trading faster than you. And then you can see all the information or lots of information coming from the market. And now I can act based off of that. And it's not me acting. I just build algorithms that literally act against everyone else. That's an unfair market, right? And that's the market that we call an open market today. It isn't. It's rigged. It's been gamed. And it's not as if it's something that necessarily happened overnight. This is a history of the big guy squeezing advantages out. And so the thing I wanted to land at, to be honest with you, is that beyond what we're talking about in markets, we see what's been happening in America over the last 10, 20 years, right? There's been we had, Occupy Wall Street, which was some revolt that was disorganized, but it's like people are saying, these rich guys seem to have made out of the financial crisis fine. We didn't, right? We've seen polarization in politics where people that typically were having a great life, the average white middle-class American, if you have a parent who was part of the baby boom generation, and you look at their lifestyles, their children today are like, wait, I don't think I can have the life my parents had. 2 cars in the garage, no debt, educate all my kids. Like, there's been price inflation for education. Some people whose parents found it, some people whose parents didn't have college degrees and send them to top class schools, have college degrees today and saying, how am I going to spend 100K, 150K, send my kids to the same school I went to? I can't afford it. When you have a system that's now basically, it's not just, the minorities and the black folks who have always been out of the circle. Now the guys who had a privileged position are now saying, I'm in trouble, I can't play, I can't survive. Then the system is fracturing. And all these things we're seeing with Wall Street bets, it's all kind of like birth pangs. It's like more and more we're seeing high frequencies of the majority saying, look, we're being locked out of a future. And when you have that, the primary system has lost trust.
So I can,
and people are going to look for something else. And in my view, they'll look to a more fair market.
All right. So that's what you think. So I want to go back to now. Remember when we started, you said this is only the beginning. And I'm of the opinion, like, I feel like it's going to correct itself. People will move on. And then, people that are shorting will short. and I don't think we will see more of the frequency, or we'll see more events like this, because I feel like the way the market will always be what it is. Like, so that's my the other part is if you can help explain what now happened, because it looked like some of this extended to crypto, and so in terms of the Wall Street guy, Wall Street bet guys, the retail investors getting into crypto and trying to move Doge coin. If you can explain what that aspect of it, and then everybody else can chime in. I just want Akin to touch on. It looks like we can also manipulate crypto, and though we all know that the crypto market, and all of these things, we have a huge fraction of people that are against it as well. So if you can just talk about the vulnerabilities in that side as well, and what you're seeing.
I mean, all markets succumb to the forces of demand and supply, right? If people want to gang up and inflate the value of an asset in crypto, they can do that, right? At some point in time, when you have sophisticated players in the market coming in, they'll look at fundamentals, right? They'll say, okay, this thing keeps moving up. Why? What's the underlying value? Does it have cash flows? Do I think it's sustainable? Right? So you will have pump and dumps. You'll have like people that manipulate certain things on the edge. But that's not the narrative. That's not the major narrative, in my view. The major narrative is that we're moving to a system now where a couple of things are happening. Fundamentally, the cost structure of a decentralized financial network is vastly superior to the cost structure of the current financial system. When I can replace half of the functions of a bank and program it into a protocol such that transactions settle instantly, I don't need a back office to do reconciliation. That's like 30 people I'm firing because their jobs don't work, aren't needed in the system. When you can have a protocol that does, I'll give you a simple example. Uniswap is a decentralized exchange. It does more volume every day in transactions than Coinbase. Coinbase has hundreds of employees. If Coinbase is going to double in size, they'll hire more people. Uniswap has 15 people that work on the protocol. If Uniswap triples tomorrow, they might have 17 people. Because at the end of the day, the core is the protocol is optimized to do and manage all the transactions where before we had a middleman. Now, the reason why I'm uber confident that I think DeFi is going to massively grow is that on a fundamental basis, the cost structure of that financial system is so much superior to the financial system today that Wall Street is coming, because Wall Street also wants to save money. Goldman Sachs is like, hey, if I can get rid of all my back office staff by migrating to this new payment network, I will. Because what am I? I'm a business. I want to get the best value, right? And if you look at what's happening in regulation in America, right? The Office of the Comptroller of Currency is the largest regulator of banks. They now say banks can custody crypto, so banks can hold it for their customers, right? The rules are actually taking shape, right? And all of a sudden, it's lining up such that the financial system that's regulated can play in crypto. The rule that was passed that said, it looked at decentralized exchanges, Bitcoin, Ethereum, and said, oh, that's just a payment rail. Banks can use it as well. A bank can have a Bitcoin node and Ethereum node today. It basically tells you that the bankers have figured out this is the future. The bankers have figured out that if they don't make a move, they'll lose their customers, because if I'm offering my customer 7% and the guy is saying on a risk-adjusted basis I can get 20 in DeFi, I'll think twice, right? If someone can open an FDIC insured bank that's built on DeFi and get 7% on savings relative to 0.15% from Bank of America, it's not going to be long before that guy says, oh, I can just download this app, move my money, and I get 7%. And in fact, and get those accounts insured. Like those platforms exist today. People will find them, right? So my view is that the fundamentals around the cost savings that the technology provides is going to move large parts of the market into this space. The regulation is lining up for that to happen. It's a global marketplace. So regulators in the past, I would say, oh, I can cordon off my market. You can't really do that anymore. So if South Korea and Singapore has more relaxed rules, money is going there, innovation is going there. What do you think guys in Silicon Valley are telling all their lobbying, all the other lobbying reps in DC? Look, we're losing competitive advantage. Look, the majority of DeFi in the world today is centered around Asia. There's more activity, more volume, more innovation in Asia. I do that every day. The teams I'm seeing coming out, innovating in the space, are in Singapore, they're in Hong Kong, they're in South Korea. Why? Because the rules there are a little more open. It's a little more clear. I'm seeing young teams of guys educated in Canada and the US, they're moving back home because it's like, hey, money's chasing me there too. Asians have money too. So the problem now is it's a global game. If you want to play in this new game, you've got to organize your money and enter the game. And the fundamentals are that I think that we're moving from an era where capital is centralized in companies to where capital is going to be in the marketplace and anyone can own a piece of it.
All right. I can so that I can get everybody on. But real quick, the private chat, please check it. You can we're sending some messages there, so you can always look at the private chat to your right, I believe. Guys. So I don't know who wants to jump in. Lydia or AK
Yeah,
wants to jump
I
in.
I want to go in. Well, one, because I actually have to leave like pretty much in the next few minutes. Secondly, because I love a lot of the things that is happening in DeFi. If you know anything about Rise, our mission is that people need to be able to invest where the returns can be found, not where they necessarily live. And there's stuff that we're doing on the crypto side that will still be coming out later on this year. So for me, I look at crypto and blockchain as an efficiency technology, and it enhances, information efficiency, transparency, settlements, payments. It allows things to happen faster, cheaper, and information to be readily available. What I don't think, or where I think I push back a little bit, is that it necessarily is less risky. For instance, high frequency trading, right, or what market makers do, to me, I think it's part of the infrastructure of the market, right? They are the guys that set some of these prices, take on the risk on the buy and sell side to create liquidity in the market, right? So some of that same behavior is actually not only possible, but it also happens on the blockchain. So where you see that there is excess liquidity, or maybe this contract is not 100% optimized, you know that, oh, you can push this XYZ to the chain to try to like take advantage of that, but then there's someone else that can do this faster than you, so it takes a lot of the same behavior we see on the normal financial markets, and just makes them even more optimized, right? And so you gotta, if you need to be smart to play in the traditional finance market, you gotta be 10 times smarter to play in the crypto and the crypto markets, right? So I don't see it as a less risky alternative. I just think that there's a lot of things that there's friction in the traditional financial world, that DeFi and crypto reduce that friction. The other thing I would say is, because for me, I'm super passionate about money, not just so as a social thing, but it's as a technology, right? It's a technology to move around value and risk across time, and you realize that if you studied the game since money ever became a thing, you realize that crypto is all hot now because, one, it's not systemic yet, and therefore there will be a point where um, every new technology that develops, the financial world is going to co-opt it. So those worlds are going to merge. One, two, is going to become systemically important. Three, you're going to see that the wild, wild west behavior of the crypto world now is going to be tempered down, because when it becomes the main infrastructure for society to move money and do things, you realize that rules are going to follow where that innovation is, right? So I'm excited about it. I think that it creates a new thing for the world, and it introduces more efficiency. Um, but I also think that, again, I'm not. If someone told me that someone ever described me as pro regulation, I would have like a few years ago I would have laughed. But having seen what I've seen so far, I still believe that maybe not make the rule that it's, oh, if you're a retail guy, maybe make the rule that, you know what, there's a standard exam or a standard test that everybody got to take, and that makes you an accredited investor, and maybe then you can take on certain risks. But it's not about your income, it's not about your professional experience. It's about, hey, can you answer these questions? Do you show the intelligence that you can actually
I
play
think that's
at these
happening
levels?
already.
Yeah, so those are the kind of things that I want to see. But I do need to bow out. This has been super interesting. Akin, you're gonna get a
Talk
DM
about
from me.
Rise Vest one more time before you head out, so
So
where people can find it.
Rise. For us, it's the main thing we're trying to do is to allow people to earn returns in dollars, earn returns from global markets, and eventually, be able to build an investment opportunity or tap into investment opportunities wherever they can be found. So Rise's mission is to connect Nigerians to the best investment opportunities in the world. We feel like earning return. Not we feel like we know, running the numbers, that earning returns in naira. Is actually a net negative when you account for inflation, devaluation, and the lack of growth. And so we want people to easily tap into global markets, but we also want to do it in a way that we believe the fundamental quality of the assets we hold are much higher than the average market investments. We take a diversification approach that cuts across multiple asset classes, which means regardless of market position, your investments are going to find some return or have some stability. And so we feel like essentially Rise would help you do much better with your money than you would do, doing your day job and then trying to manage your money. So you can find us at rise.capital, www.rise.capital.
One more thing. The big news
Sure.
about with ARM. Do you want to say anything
Yes.
about that?
So it's not actually new, but the announcement, ARM made the announcement today. So we partnered with ARM to basically act as trustees for our investments, which means they're overseeing what we're doing, the investments we hold, the funding from our users, making sure that everything is airtight. And so that announcement went out today. It's actually been in place. The agreement has been in place since late last year. And we're going to try to see other things that we're coming up with this year, including a crypto fund, a couple other asset classes that just make it possible for you to invest in whatever you know that is the best returns. So check us out at www.rise.capital. Our Twitter handle is RISEVEST at RiseVest. And, download our app, RiseVest, on Play Store and App Store. So um, I think...
Well,
So if you want to join the cap table, I think we're wrapping up on that conversation. It's been super hectic. We're actually having some issues on our US end.
AK, we need serious banter discounts. Help us now.
Lydia
Help
can tell you
us.
a lot better.
Help us.
Yeah,
Bola,
but
Bola, please, if you think this is a joke, better stop joking. AK, finish what you were saying, please.
send a message to me at hello@rise.capital. Just put the subject fundraise. We're like a week from closing. I don't know if I'm allowed to, if I should have said that or not, but I guess it's fine.
What's the website again? Rise.capital, right?
www.rise.capital, rise.capital. And so, yeah, it's been a super insightful chat. I already know Lydia, so I'm just waiting for her round to close so I can sit with her and ask questions. I don't have so much bandwidth at the moment. Akin, I'll definitely reach out. We have some conversations. But yeah, Bola and Justin, it's been a pleasure. Thank you so much.
All right.
All
Thank
right,
you so
AK,
much.
thanks for coming on. I'll check out you. I'll be in your DMs.
All right, then.
I'll be
Peace.
in
Thank
the
you.
email.
All right, Lydia, I know I owe you. Sorry.
All right. All right. We have someone else joining now. Please show your face so people can know who you are. But Lydia, please. I feel like first I need to hear your opinion about crypto and all of what Akin has been saying. I feel like you've been quiet. and so I kind of want to hear what your thoughts are on that, and then
No, I'm a fan of crypto. I hold it. We manage a bit for clients as well. I agree with what Akin is saying about where the cost inefficiencies in the current market will drive a lot of the demand and adoption of crypto and decentralized financing. What I am concerned about is when regulators step in, whether they put that regulation on the chain or whether they just do what they do with laws. that's where we start to see is where we start to see our free market, start to look like what we're dealing with now. And so that's kind of the concern as I watch central banks come up with their digital currencies. I mean, as I see um, Congress start to take on hearings to learn more about this crypto and decentralized. It's it's always been the case that government comes in and tries to smash innovation into a box that they understand, as opposed to understanding the innovation and coming up with ways in which that coming up with laws that themselves might be innovative. And so that is my only concern with with crypto. It's not even a concern with crypto. It's a concern with allowing crypto to flourish in a way that can actually be beneficial for all of us. But yeah, I have no objections to what Akin has been describing and been saying. I think the only thing is the last point I'll make on it is human behavior. And he started off with that. We can't decentralize or regulate human behavior. So pump and dump is going to happen, especially on coins or altcoins that don't have the volume, that don't have any volume. It's very easy to move something that doesn't have volume anyway. So we're going to see these kind of run ups, regardless of whether it's traditional mechanisms or blockchain mechanisms. We're not going to be able to stop and change or regulate or innovate or make transparent basic human behavior. People are going to act and behave, have people act and behave. They want, and that's just what that's going to be. And that's the problem with our regulators. They want to regulate human behavior as opposed to put a few protections around us and then let us put a few protections around us and give us education. How about requiring people to learn more about crypto? I think someone said about like a test or something or Eke had said that on his way out, right? Just there needs to be some education as opposed to regulation. That's the problem that we're having, at least in America. It's too much. It's too much regulation and not enough education.
I mean,
Thank you. Thank you. Please, I can hold on. I wanted to bring in Jesse. Jesse, I don't know about Money Smart. Maybe you want to say something, but I think you've been listening. So if you had anything to add, please go ahead. Or if you maybe wanted to chill a little bit and let I can go, it's your choice. But I just wanted to make sure that we brought Jesse in.
But
To,
yeah, let me still listen in. I just joined, so let me see the flow. Then I can contribute.
go ahead, I can please.
yeah, I was just going to follow up on Lydia's point, and I think that so you're right. At the end of the day, I think we should be optimizing for education and access to information, right? I think that today, anyone with access to the internet has everything they need to know what's going on in crypto, right? I came from a traditional consulting and finance background. I got into crypto because I was trying to solve this remittance problem into sub-Saharan Africa. I'd gone to fintech in Africa like 10 years ago and invested in a mobile payments company. And we realized that, wait, sub-Saharan Africa is the most expensive place to move money into. We're building out this agent network-based mobile payments company in Sierra Leone, and we saw it as an opportunity, right? And I got into crypto from a non-speculative point of view because I thought, okay, this technology is the future of exchange of value globally, period, right? And one thing leads to another. We start doing research, and I got really interested in, my background is economics. So I got really interested in just this idea of a change in market structure. Like what happens when you're moving from centralized companies to these open networks? How does that impact actually how information gets proliferated? How does that impact how the market behaves? For me, it was like a big research question I had to answer, right? Because that's just my I have to kind of have a framework on how I think about these markets. And I just spent the time, right? I spent the time with Decred for a year and a half doing governance, trying to understand, okay, how do these networks actually, how are you going to get, what's the, my point, what I was trying to get at is what sustains long-term value in a decentralized network? And it's not the technology because most of it is open source. Anyone can go for code and build something, right? And so I kind of square down to it's the nature of the incentive systems within the network and how it's governed. So why are certain people attracted to certain networks is because they have agency there. I can own some of the token. I can have a say in governance based on the governance structure. I can put up capital and hopefully get some of the returns of the network. But the point here is that you're moving from this very shareholder centric structure to a market structure where anyone can literally buy into that market and participate. Now, you're not taking away all these risks like we've talked about, but you're leveling the playing field for access. I mean, I've seen Africans in some of the darkest, in some of the hardest parts of crypto to get into. Like I've seen Africans get there before me. Like I've seen people in chats and conversations where you guys don't reach here already. And the thing is, the thing for me is that, and I play it very simply, when you can see someone who is in a landlocked country with a highly inflationary currency that's stuck, now participating in a market where they don't have the currency risk anymore because they have stable coins, right? They don't have the issues of, oh, your IP address is from Nigeria, you cannot transact on this platform or whatever. That is a massive shift. It now tells you that anyone armed with information and the knowledge and know-how can enter this market, learn quickly, and play like everyone else. And you're not stuck under MEFI's, inflationary policies. Like you have an option, and that for me is the fundamental thing why I'm really spending time in the space. I think it's a fair market, and I actually think that the people that benefit most from these open marketplaces are people from emerging markets, particularly sub-Saharan Africa. Because if you look at the global stage, sub-Saharan Africans are at the most disadvantaged.
Yeah.
Everything from bad policies to not having a seat at the table in the global market to having IP addresses blocked because for some reason I can't trade. Look, I was in last time one of the last times I was in Nigeria, my E-Trade account got locked because I was trying to log in from Nigeria. And I had to kind of go through all this rigmarole when I got back. But I'm like, why should that be the case? So literally blanket. Not even like, oh, we saw a login from your account. Like, just make sure. No, locked me. Like,
But I can't. You are ignoring fraud, though.
no, no,
You are ignoring
no. I'm
Casa.
not.
You are
I'll tell
ignoring
you why.
Casa
No,
boys.
no, I'll tell you why. There's more fraud in the United States.
Come on.
There's more fraud from Americans and people in these markets destroying the system more so from anyone else in the world. But yet, the blanket statement is, oh, Sub-Saharan Africans should not be in this marketplace. Give me a break.
Don't mind Bola. Let's catch you at Salah Mohammed trying to get back into the country.
So to me, it's like now it's like, oh, right. And to be very honest with you, right, I actually think Sub-Saharan Africans have an advantage because for this fundamental reason. We've never had real agency with our governments or our institutions, right? As a Nigerian in all my life, the government has never had my back. The government has been more interested with what all companies are doing, who has been paying for Nigerian government since independence. All companies. It's whoever is bringing the money that has the agency. For a long time, taxes were not an issue in Nigeria, and where at the end of the day, it's whoever is paying the money that ultimately has agency with the institution. If the government starts taxing everyone in Nigeria fully, what's going to happen? They're going to be like, okay, what are you doing with my money? And they now will be like, now I'm going to watch you guys a little more closely. So for me, the issue now becomes that because Africans have never really had agency, the average African fends for themselves. Most of us provide our own electricity with diesel. Most of us have to figure it out and hustle it out. The government has never really had our backs. And in the decentralized marketplace, where the power is now in the participants' hands, Africans will thrive because we're used to like fending for ourselves, figuring it out, not being cheated, like doing the due diligence. And what I think is that when this marketplace opens up and Africans now start getting more access, you have on-ramps, we will have an advantage because we've been at the bottom of the information access for the last couple of generations, right? And so ultimately for me, that's what really drives a lot of things. The fact that anyone can come and play. And sure, it might take a while. People start figuring out, but necessity is the mother of invention. I mean, I did an interview for a piece about Nigeria and crypto, and I was doing some research for it, and I saw this video and this article Reuters has put out. It was about Computer Village. A lot of the guys in Computer Village settle all their import transactions in Bitcoin. Why? Because dollars are scarce, Chinese currency is scarce, and by
Please,
the
do you
way,
have do you have that article?
I'll send it. Actually, I'll try and look for it and put it in the chart. But the point is, the suppliers are now saying, "Hey, pay us in Bitcoin rather than whatever else," because they too want to like skirt their own currency controls. So all of a sudden, if your supplier, who's your lifeline, says pay in Bitcoin, there's no dollars, there's no you figure it out, right? Because your business rests on that. And all of a sudden, all the guys are now realizing that wait, Bitcoin was one thing and it was volatile. Now you have stable coins, USDT. USD is the largest stable coin, and most of the volume in USDT is in Asia. So all of a sudden, you can buy this basic digital dollar, store it in a wallet that no one controls but you. Like, your supplier in Shenzhen can send you a bill of lading that, oh, computers are on the ship, and in 5 minutes, you pay him. How are you doing that before? Going to your bank, lining up, I got no dollars. This one, that one. That's costing you money. All of a sudden now, everything, your bank is in your wallet and only you controls it. Go to Computer Village. Start knocking on some doors. I guarantee you, every third person there knows Bitcoin, uses Bitcoin, settles in Bitcoin. And now their business is thriving. And they could care less what the CBN is doing because they're not dollar exposed anymore. They're exposed to their physical goods, maybe some Bitcoin, but probably largely Tether because it's basically indexed to the dollar. I'm free. And to me, that ultimately is now that, oh, I can now play in the game like everyone else. No one needs to know my name or my IP address. All they know is that they know my Bitcoin address, they got paid. They don't even care who I am. They just know that you're buying X, we're selling in Bitcoin, right? I might have a trusting relationship with the supplier. I already know them and all that. So it's cool. But the payment system now is open. And that's massive because the current payment system we have today is rigged and Africans have the shortest end of the stick. And beyond that, the last thing I'll say is you ask yourself a very simple question. In 1985, when IBB was president, 1986, 1985, I remember we came to the US for vacation. An airline ticket was 100 and something naira, and it was more, literally the naira was stronger than the dollar, right? All of a sudden, what's naira today? 500. Some of the reasons why naira is 500 and not one-to-one $1, you can say, oh, sure, bad government, bad this, bad that. The fundamental reason is not that. The fundamental reason is that the dollar-backed economy picks winners and losers, right? When they had an oil crisis in the Middle East in the 70s, and the Middle Easterners shut off oil to America, there were lines in the US in the 70s. People were lining up like we line up in Nigeria during full scarcity. And the US government said, wait, where can we find oil in the world? Nigeria. Nigerian oil was prized, clean, light sweet crude. You didn't even have to refine it, said boil it small. You can put it in the gas engine, right? And to a large extent, if I'm to be fair, my first job out of college was the IMF, International Monetary Fund. And my 2 years there, what I saw was just basically like, wait a second, this game is rigged. Oh, social adjustment program, SAP, reduce your devalue your currency. How do you tell a country to devalue its currency and expect foreign investment when there's no rule of law? Tomorrow, someone could overthrow this guy and change all the rules. Are you going to put your money in Nigeria? But what's the effect of SAP when we reduced the naira to the dollar? Oil is cheaper for America to buy. Period. And if you don't understand that, right? If you don't understand that 65% of the cobalt in the world is in Congo, but Congo is the biggest basket case of a country in the world, that should tell you something. If Congo had sovereignty over its cobalt, sorry, Oga, your iPad, your iPhone, your TV will cost a little more. The $100 billion that Apple has as cash on their bank and accounts will be in the pockets of Junior in Congo, living a decent life. I'm sorry, that's just a little bit of
all right, thank you.
Keeping it real. That's what we do on the show.
I want to say something. Akin, you're just busting my brains. You spend the bulk of your time in the US, but you're representing just the way it is on the street. I want to bring an example. My brother-in-law is just out of the university. He's one of the first set of people I heard about crypto from. I've been working for like 10 years, and I just started catching up with crypto in 2019. He told me about Stellar Lumen, XRP, and all that. I kept telling him, "You're going to get into the hands of fraud, blah, blah, blah." I was worried about safety, but this guy knows his way around it. And recently, when I became bigger into playing into personal finance and the like, I looked into it. And some of those things the guy told me like 3 years ago are like that. I was like, Jesus Christ. If I knew this like 3 years ago, I would be somewhere else. So, because we are served the bad end of the stick, like Aki said, we have to fend for ourselves. It's survivor. Most of the guys in the developed world, they don't have to think about survivor. The system works, everything works for them. But we have to find what works. And that's how innovations are born, are given birth to. So I think the educational part as well, even if the government doesn't take charge of it, we are educating ourselves. There are institutions, small pockets of education. Like I make a lot of money myself educating people about crypto and about the stock market. And I'm not educating them about the Nigerian stock market. I'm educating them about the US stock market. And we have people right here sitting in Nigeria able to invest in crypto and foreign assets. So I think the future is bright. We're at a point where everything is decentralized already. Anything they like, let them be doing. It is already it's an open market. No, the things are
Just
not
I have a question for you. Just I have a question
okay.
for you.
Shoot.
I want your thoughts on this whole. I don't know. Did you advise any of your clients or people on your platform about the GameStop, AMC, Wahala, all of that stuff that happened last week? And I just wanted to know if you guys got involved and if you guys made real money from it.
Okay.
Can you hear me?
Yeah, I can hear you. Well, let me speak from my own point first. I usually keep aside play money in my monthly budget. That play money is money for beer or money to go around and enjoy myself. When I see opportunities like GameStop, I use my play money for it. And I use my play money for it, and I got about 450% return in 3 days. Yes.
That's 1 year's play money and some change.
No, I'm telling you, I got into AMC 3 days. I got into GameStop 2 days. My stockbroker made it difficult for me to sell, and I could have gotten close to like 450%, if not that they delayed me to sell. Then that's they call it Osho free money for me. So I usually tell people when you want to get into something very risky, always keep play money aside. It's not money for my children's school fees, it's not money for cable TV, it's not money for my food, it's not money for my rent, it's not even money for my holiday. My holiday money is not play money. I set aside play money I can lose. So when opportunities like that come, I don't allow greed. And that's what I tell my clients, the people that consult
I
with
think
me.
Lydia alluded to that too earlier on in terms of know when to sell.
Yes,
Be a disciplined trader, essentially, if you're trading.
I mean, it was still going up. I said, okay, I'm okay with this one. I'm out, guys. You can take the rest.
Yeah.
But let me tell you, I went back in to GameStop with just $50. I did that just to mark the space, to record history for myself. That at so point, this happened, and I'm practically not going to sell it at all. I will leave it in my portfolio. I will remember it 5 years, 6 years, that this is what happened at this time of the. I mean, yeah, that's why I kept it there because I'm done with it already. So that's my own opinion about it. It was a moment in time. Right now, I'm waiting for someone like Malcolm Gladwell. I know he likes things like this to come and give us an analysis of how this went out, blah blah blah, this and that. Because I feel some hedge funds they play both sides. I'm
I think
sure they
someone
bought
said that
call.
earlier. I think someone
I'm
said
sure,
that earlier.
yeah, I'm sure they both
They do for
bought
sure.
call and put. Even those ones that were losing money, I would be too shocked if they also bought calls in addition to their puts and try to balance it out. I mean, it's a chess game.
It's okay.
The retail investor is the pawn. That's my own opinion. It's opinion. I'm not a
But me,
professional.
I don't think
I'm
anything
only
is
I'm
changing.
only throwing
I
mouth
just
in
think
this air.
that I just think that the retail investors want. Maybe I don't even think they won because, like you said, they're playing both sides. But they shall won something this time around. But I don't think that that's game changing or market changing. Sha.
Well, there was a couple. There was what two hedge funds that filed for bankruptcy. So
Exactly.
they
Too.
got two of them.
That's a win. That's a
But
win.
That's a win.
the bankruptcy is also a game, right?
I
You know
just
the
think
bank.
that
So,
I
so,
just think
so
I
who
just think
won?
that nobody is going to approach the market the same anymore. That's what I meant by this is a game changer, right?
Your eyes,
This is a turn.
people. I think people will go in with their eyes a little more open, and that is
Yeah.
awesome because, like to the point, Jesse was saying, you have. I'll give you a scenario. You have a hedge fund that has a relationship with the bank. The bank knows who is paying the bills, right? They're a customer. You're getting fees for what they're doing, right? So a hedge fund now gets a position, or any fund can have an open position in the marketplace where they have to. It's like a 13F. You have to every quarter kind of say what position is, right? So everyone can look at it and say X and X fund owns this much of a stock, right? The same bank will have a research arm that would say this is the greatest stock in history. Everyone buy, potentially, right? CNBC and all the media outlets are also kind of in the game. Hey, right? We are pumping this. Newspapers that might be in the pocket of these investors too. And they're all friends. After all, like the 10 billion guy had,
Citron.
the 10 billion hedge fund guy is probably his cousin that runs the newspaper, and there's his cousin that runs CNBC. It's all one big family, or the friend of your
Probably
country club, right?
invested in it too.
Now, the one thing you might not know, for example, is that that guy's long position could be fully hedged in puts or in some asset where he doesn't have to disclose that. So all of a sudden, I might be long something, thinking that, oh, I'm in the same club as all the big boys. Yeah, the big boys have covered all themselves and hedged. And if the market crashes tomorrow, they're fine. I'm the one that's losing. Right? In that kind of market, it's not just like a structural problem. It's the fact that those who are privileged own all the means of not just capital, but information dissemination, right? They own and have relationships at everything that moves people's opinions. And that's why it's a fundamentally problematic situation we find ourselves in, where at the end of the day, they own the regulators, they own everything, they own the tax system. Why is the hedge fund paying less taxes than the guy working 40 hours a day who's still in poverty? That's America.
But this is why I'll say back to education, because we can all hedge our positions too, and people don't because they don't know they can, and they don't know how. I can buy calls, I can buy options to hedge my portfolio as well, but I don't know how, or I don't know to do so. You know what I'm saying? So it really is another level of keeping the general public miseducated or uneducated
Well,
to take advantage of that.
but it's not just the education piece, it's the access piece, right? It's the fact that even if I knew all these things, if I'm a small player, I don't have the same access, right? The high net worth individual or family office can get a prime brokerage account, can trade in stuff I can't, can get into VC that I can't, even though I'm probably just as educated as some of these guys. But if you're not an accredited investor in America, you can't invest in certain assets. I mean, those rules are being relaxed, right? So there have been some relaxation around that. But historically, why is that the case? Like, why shouldn't I also be able to invest in DoorDash?
And again, regulation.
Right.
This is
And
why.
you
This is why I'm
exactly.
opposed
And
to
so
all this regulation.
But that
and the money,
asset class is not just access. That's more access though than you being. You can be accredited all you want if they don't let you in DoorDash. You know, You can't get in DoorDash.
But
I
that's my
can't even buy
point.
call. I can't even buy call and put here in Nigeria. I don't have a platform for it.
Wait first. Wait. Lai just joined us. I think Lai,
Just say their platforms is, but
Okay,
just say
I
their
was
platform.
was
Check the
seeing
private chat.
I was seeing
Jesse, check the private chat. Check the private chat, Jesse. Lai, welcome. We're just talking about the topic is about hedge funds versus retail investors. Maybe give us your general thoughts. We've talked a lot about different types of assets too. Akin's talked about DeFi and a lot of crypto, and made a lot of strong cases for why people should look that side. Lydia said people should be allowed to lose money.
They can be allowed to make it too, but they should be allowed to. They should be allowed the access and the opportunity to make money or lose money.
Okay,
Whatever
so
they.
we're going to be wrapping up maybe in the next 15 minutes, but 10 minutes. Next 10 minutes we'll be wrapping up. So, like, just give us your general thoughts on this whole issue. I know I'm sure you have some thoughts about it, and let us know if you made some money too, because Jesse just made 450%. So, if you made some money too, please let us know.
I didn't make any money, so if Jesse is hearing, I'll be willing to take. But with respect to, I feel like I kind of caught the tail end of what Akin was saying in terms of just the inequities in the system and all of that stuff. And what I would say to that is, I think there's been this debate over the last week, I would say, about where you have the hedge fund, CNBC type folks basically saying that, oh, it's going to be the retail investors that's going to be left holding the bag, right? And everybody else is going to make money. And my response to that is, the retail investors have been holding the bag for a long time. So this isn't a new phenomenon where all of a sudden, because there seems to have been this coordinated effort to kind of like go after the so-called big guys. You are now concerned that, Lai that just has a Robinhood account will now lose $700 that he's playing around with. Yes, some people are going to make money, some people. So, we've had these folks losing money for a long time. The other part of that, I think, has been discussed or talked about is the fact that these hedge funds, the inequities in the system is so great that, they're talking about they were betting, say for instance, with some of those companies, over 100%. Over 100% of the available float, right? Like basically, so that's one piece. Okay, fine. They are, for whatever reason, they are allowed to do that. That is not illegal. Okay, putting that aside. The other piece that has kind of baffled me is the fact that they can also use ridiculous amounts of leverage to make these bets. So money that they don't have. So it's not just personal risk anymore. That is systemic risk. So that is why they had to bail these guys out. Like, they had all these other hedge funds that had to build it. That is absolutely ridiculous. It's kind of like me saying, okay, I want to buy a call or put. I only have $10,000, but I can actually
borrow money
up to $100,000. You are not going to get the access
to fail all over again.
Yeah, but even if my broker advances me that money, that is not going to cause any kind of systemic risk. These folks are talking about trading in the billions where they probably only have $5 billion cash and they are betting up to like 50 billion. That is ridiculous. Like, I don't understand how that can happen. And I think for more than anything, that's why everybody freaked out, right? Because it's not just about them losing money, it's the cascading that has in the whole system in general. So
and that is called, that's fundamentally called a moral hazard, right? When you haven't had to deal with the consequences of your actions historically, you'll do it again. When the banks almost blew up the global financial system. Not one CEO went to jail. Not one CEO lost. In fact, as soon as all the CEOs paid back the money that the government forced everyone to take, the bonuses came back just like before. It's not as if you said, wait, because at one
You're
point,
blacklisted.
but no, but even beyond that, so let me even make it even clearer. At one point during the financial crisis, all the banks in America were effectively owned by the government in terms of the basically, right? So now you have your hand on their necks, right? What happened? Did the government pass rules that said bank CEOs cannot make X more than their average salary of the employees? We talked about that. That nothing happened there. Did the government put certain rules in place that effectively would have made sure that these guys couldn't take the leverage they're taking? Because you have to remember, we paid for that bailout. Every taxpayer and your children that haven't been born are the ones that are going to pay that bill. Yet, when we owned everything, what the banks came out on the other side like nothing happened. That when you live in that system and you know that, look, we almost destroyed the world and taxpayers bailed us out, what are you going to do next time? You'll take massive risk on the offing that you will make a lot of money, and if you don't, the Fed will just print money and bail us all out. And sorry, the sucker that is as a taxpayer, sorry, you lose. And not only do you lose, when we now want to enter the game like you're now saying, sorry, the rules have to change. Oh, you guys don't know what you're doing. Oh, the poor tax. No, that's not what I'm talking about. We have information too, which is why when Chamath was on TV on CNBC, Chamath was like, "Look, have you been to those rooms? I've been there. There's smart guys in there doing fundamental analysis. I've seen people talking, and Chamath is a very bright guy and has a lot of very bright people. He's like, I've seen smarter conversations in Wall Street bets, and I've seen in boardrooms of branches. So it's not like these guys are just like a rabble of people that don't know what they're doing. We all have educations too. You don't think MBAs are also in that room or ex-bankers make money? You don't think they're now sharing the game plan on, here's how it works? What do you think people do in social media? They talk to their friends and they're like, look, Ogbeni, this is how the game is played. Let's play it. So it might seem like a herd of 2.5 million people in the chat room, but they're probably like 30, 40, 50, 200 people that are really smart. They're now telling everyone, here's how we're going to do it.
So real quick though, sidebar, how do you think this whole thing will help the value of Reddit itself as a platform?
I don't know. I mean, maybe people will sign up. I mean, Wall Street Bets at one point, I checked like early last week, there were 2.5 million people in Wall Street Bets, and like on Sunday there were like 7 million people in the channel.
Huh?
So some of them are probably brand new people that never heard of Reddit before that signed up, opened an account, that jumped in. Some people were already on Reddit and joined that channel, but all of a sudden, a lot of people are now full there. So on one level, you think what's happened, people now realized, wait, I might not know what I'm doing, but there's a group of people just like me who have literally been holding the bag all our lives, and now we can organize. Now we can get into those rooms. Now, right?
That's the different aspect, I guess, to Justin's point. I think Justin was trying to make that, things can change that way, at least in that respect.
Look, fundamentally, it's Jesse's point. The game is finished. It's different. Look, at the end of the day, it's always going to be someone at Citadel, at Goldman, somewhere that's going to say, hey, here's some piece of information. People talk. Don't we all talk to each other? And this all millennials, analysts in these companies, they're not sharing with their friends. You think they're not telling the guy they went to high school with that, hey, getting on this deal, all of a sudden the information gets out there. Information, asymmetry, and any information that's hidden today is going to be out there.
Will come out.
because more than anything else, one thing people have to understand, when you understand the power you have, same thing happened in elections in Georgia where 2 senators defeated two Republicans, and now Democrats hold power. What happened in the last election? I'll tell you what simply happened. Black people in America for a long time have felt that their vote doesn't count. Coronavirus happened. People could now vote for like 2 weeks, 1 month, mailing their vote ahead of time. Why is it hard for black people to vote in America? Oftentimes. Because oftentimes they don't have time to go vote. I can't take to go and vote, to go and line up. Now all of a sudden I can mail my vote in. Oh, it's easy.
All people have is time now.
And all of a sudden now, they now realize that there was enough, the system, particularly in 2020, made it easier for black people to vote. They got the vote. All of a sudden, people are now saying, wait, we have power. So next time, what's going to happen in the next election? Black people now have agency. They're going to come out and vote. They're going to, right? So it's the same thing happening across the system. Information is moving, information is more accessible. People now have the tools. The new leaders cropping. The guy that did the ringleader of the Wall Street Bets group, he kind of said something about himself.
Come on.
Yeah, like he wrote a post, one of the letters, and he said, "Look, I am a surgeon in Detroit."
What?
Yes, I'll summarize it. I'm a surgeon in Detroit. I did fantastically well in 2020. I have a 401k. I got a raise, but it's like I live in Detroit. I see the state. I see people lining up for food that can't afford food. This is America 2020, richest nation in the world, right? I see my patients that were coming last year. They ain't coming no more because they can't afford preventative care. And I see my society crumbling around me. And yet, Elon Musk, his wealth, did 5x in 2020, right? People are getting all super rich. And I'm not calling out Elon Musk. He deserves some level of, he's worked for his money. But the problem is a system that overly rewards certain people, and the disparity is growing. And the average guy that's working just as hard, right? He might not necessarily have the education or the access, but he is giving his effort. If I'm willing to work 40 hours a week in America and almost like, break my back at it, I should have a decent life. And that doesn't happen anymore for most people.
All right. Thank you, Akin. Thank you very much. Thank you. So I don't know if you guys can read the screen. Just informational. Someone said, "Hey, in Australia, I'm allowed to borrow towards a call or put option as a retail investor up to 60% stock." All right. So thank you guys so much. We have to close now, but just in closing, if you could just give us 30 seconds or 1 minute of any points you want to leave us with to close, and then Justin will give us final thoughts. So I don't know, Lydia, do you want to go?
Sure. Thanks for having me. Great conversation. Fun. I like debating banter. What I will say, I guess, to leave everybody with is that you should be investing. So whether you were in GameStop or not, you should be investing, but you should be doing it smartly. You should be getting in any asset class that is of interest to you, and you should be learning about it, educating yourself on it, and you should be using your money to make more money. That's what I would say to you. This should not be a discouragement. Oh, the system is rigged. There are things that can be done. Maybe you shouldn't be investing alone, but I say be invested and get invested.
Thank you. Ake.
I think for me, fundamentally, I think there's been no time in history of the world where access to information is readily available for the majority of people. And I think in a system like that, you should be ultimately indexed to learn as much as you can. So it's not just about, okay, something is going up, let's make money. I think the fundamental question people should be arriving at is, why is something happening? And until you're fully satisfied that you understand why, you shouldn't be taking exposure to certain assets. Now, I think there are many ways to make money. So I think fundamentally people should figure out, where do you have an advantage? Right? What do you like? I'll give you a simple example. I have 0 stocks today. I'm all in crypto. Now, there are probably no more than 20,000 people in the world that should be taking that kind of position. But the reason why I'm comfortable.
So you didn't buy GameStop?
No, to me that's a waste of time. Like all those things are distractions, and I'll tell you why. Because for me, no, Duro. Look, there's something called opportunity cost. I index for where I have an edge, and like Lydia was saying, access to information and all those things are important. I know where I have an information advantage, where I have a knowledge advantage, and I try to play and optimize for that. And I try to go as deep as possible to know what I'm doing and why I'm doing it. I can't be everywhere. So if I'm wasting time on, Wall Street Bets, do that, sure, maybe I can do something there, but that takes away from where I feel like I have an advantage. And I think everyone has an advantage somewhere, right? There's some access to knowledge you have. If you're African American in certain walks of life in America, you have advantages. I mean, African Americans basically dictate style, music. The majority of American culture that's original comes from African Americans. You're indexed to an advantage there. Figure it out. What's the next trend? Who's the company behind it? What's Diddy doing? What does Diddy know? What's Jay-Z doing? What are they investing in? Like, what chat room can I go into where I can now say, hey, I have information, and when I put it with that knowledge, I am uniquely positioned to act upon it. And even Akin doesn't know that because I can't end up in the hood with me and doesn't know certain things that move there. To me, that's life. Like, figure out where you have the advantage and then go deeply into it and max out. And I firmly, from my position, I exit the stock market for two reasons. One, I don't have an information edge there, and I never will. If I watch for a hedge fund, maybe I'll still be in the market. Those guys have an advantage over me. I operate in a space where every day I talk to teams, I talk to folks who are literally building the future of financial services. I have an edge there. So why don't I spend and optimize for that? So I tell, from me, people should take advantage of, if you have some time on your hands, maybe you ain't going out and hanging out anymore because of Corona, you have some time, spend time figuring something you have interest in, something you want to learn. The Nigerians making $50,000.
This is profound.
No. Look, one of the biggest artists in digital art in the world is a Nigerian guy, Osinachi. He sells pieces for $50,000. He lives in Nigeria. He works out of Nigeria. He builds most of his art on Microsoft Word. I don't know how it does it, but it comes out looking fantastic. He is one of the top 5 artists in the world in digital art. The guy's pieces, some go for 50K, 5K. The guy is probably independently wealthy.
In crypto, right? Itself,
yes.
With crypto, yeah.
What did he learn? He said, I have an art form or a skill that's unique. I'm married with a new technology in the global world. People subscribe to this thing because it's unique and no one has that. And people are like the story. Hey, how did you do this thing on Microsoft Word? Like, that's what I had access to. So I built a competency there. No one does it like him. So he's unique. All of a sudden, he's a star in the global stage. How did he find his way to understanding all that? And like, he figured it out, didn't he? He ain't. So for me, it's like, I don't know much about NFTs in terms of art. Like, I enjoy and look at that stuff, but I don't have an advantage there. And it's something that I have an interest in in terms of what's cool. And I just don't have the time. So I'm going to index for where I have the time and the space and focus. But there's all sorts of stuff happening. And there's room for everyone to carve out something and find the advantage. But it starts with knowledge.
Thank you. Thank you.
Art is an asset class.
We're gonna do a show on art one day. We already, even Justin, you already have someone in mind. I really want us to explore that art as an investment form, asset class. We're gonna do it one day soon. Who wants to go next? Jesse, do you want to go? Quick.
Okay, yeah. So what I'm just going to say, for people who have not been long in investing, just like I am, I'm one of the youngest investors on this forum, I'm sure. I'm just 12 months old as an investor. Before then, I just used to get my money and spend my money. What I'll tell them is this.
YOLO!
You only live once.
Yeah, but I became 40 and then everything that begins at 40. Now, this is it. Yeah, I tell people that invest only in what you know. That's fundamental. It's not completely different from what Akin said. You have an edge only if you know. Don't FOMO into anything. When you FOMO into things, you lose your edge, you go in naked, and you get burnt.
You get
when
slaughtered.
You get burnt, yes, when you get burnt, the pain of losing hurts more. It lasts longer than the joy of winning, and you may never come back in the game. So get educated. Invest only in what you know. Don't spread yourself too thin. Don't be in everything. Find your edge.
Thanks. Lai.
Yeah, I mean, I don't know how to follow everything everyone has said, but what I would say is don't be afraid to try new things, right? Like, oftentimes you have folks that, they may know a friend or maybe family or whatnot that is doing something, and all they do is just say, that guy made X amount. I know this person that knows that person. If you are interested in something, you know, the information is out there. Try and dig in a little bit. If it continues to be of interest, dig in more and more and more, and try new things. I mean, what I tell people is there is a concept called, you know, kind of like affordable loss, right? Like if you are going to dip your hand into something, just try and understand that, okay, what do I have that if I were to lose it, it wouldn't affect me in a way that is critical. So you try that, it doesn't work, you can move on easily. As opposed to me hearing that somebody is making money on GameStop and I go put all of my money. so, yeah,
Just why are you laughing? Don't act like you didn't cash out.
So don't be afraid to try new things, and you know, use whatever information is out there for you to kind of like learn. That's all I have to say.
All right, thank you guys so much. Really appreciate all of you that came on, and also thanks to AK that came. Justin, this is the end of the show. Do give it away because I know you made money
Please, I'd
last
like
week.
to follow everyone. I know Akin's Twitter handle, but I don't know that of the rest. Please, I'd like to follow them.
Don't worry. If you can post it in a private group, just post your Twitter in the private chat if you don't mind, everyone.
No, if Jesse, if you look at the handle, the show handle on Twitter, I think everybody's handle was tweeted out, with the exception of
except for
probably
Lai.
yourself and Lai. Yeah, so Lai, just type
Yeah.
your own in the chat section.
Jesse, you can. That's my handle on all social media. So whichever is your favorite, you find me with that one.
Lydia, are you available if people need you for investment advice, or you don't
Oh,
know?
absolutely.
Okay,
Sure.
please
Yeah.
sell your market, please.
Yeah.
Plug
Thank you,
events.
Bola. Yeah. So FM Capital Group, we work with individuals with asset management. We work across all asset classes. Again, our niche is to get into add venture capital as a asset class in your portfolio, as a piece of your portfolio. And so we do a lot of that. Again, we invest at the early stage in Africa.
Do you have a website?
Yes, our website is fmcapitalgrp.com. That handle too on Instagram and Twitter. I don't think there's another one. Yeah. So yeah, you can find us there. You can reach out to me, and I'm happy to talk. You know, I give office hours for an hour. We can talk about your situation, or if you're just learning and you want just some guidance on where to go. But my thing is, everyone should be invested. I'm just gonna echo what Akin is saying. Just find what your edge is, or as he put it, find what you're interested in, and be invested. Be invested. Multiply your money. And Jesse made the point too. People are too scared of the losses over the wins. Like you gotta win. You're gonna win in some kind of way if you're educated in what you're investing in. So, thank you, Bola, for allowing me to plug.
Yeah, no problem. Thank you. This is what we do. If you've written a book, to let us know, we'll plug it, or we can even buy some.
2 books, but
all right.
You can find those in my bio on LinkedIn.
Okay.
Justin.
Yes, all these brilliant people have summarized it pretty much. So I'm just going to plagiarize all of you and repeat what you said. So Faith, Lydia said, whatever you're doing, invest. No matter how little, invest. Learn what it takes. Educate yourself on personal financial management, and make sure that you are investing some money aside from just eating. And then let me go out of turn. Jesse backed that up by saying before he turned 40, all he did was consume his money, make money, eat money. So lesson, you don't have to get up to 40 before you realize that you should set some money aside for investment, not necessarily savings. Right? And then Akin said, Akin just went Adam Smith on everybody and said, listen, competitive advantage, focus on what you have a competitive advantage in. Yes, focus on what you know. Let that lead to what your chosen investment vehicles are.
He does give me a very, very strong idea. Akin, thank you.
So And Lai also said pretty much the same. Lai did what me I'm doing. Lai plagiarized everybody, so me and him are in the same WhatsApp group. All right, so that's that for today's show. As you all know, we announced in the last show 2 weeks ago that we were going to be doing giveaways on the show. Bola and I have been lazy about it. We pretty much haven't figured out how best to optimize it, but we do have the Prosperity Paradox, autographed copies of the Prosperity Paradox, which was written by our own Efosa Ojomo, who's been on the show before, and the late Professor Clayton Christensen and Karen Dillon. So we have chosen to last. So we have two winners. Jan Stacy, who was in today's show. Jan hasn't missed an episode of this show. I don't think. In fact, Jan has been more consistent than us, because I think the period when we took a break, he must probably have been checking the channel if we were on. So Jan has even attended shows that we didn't hold. And then another regular that I've noticed recently has been Ebube Nachi. Bola, you've noticed that as well, I'm sure.
Yes, I have.
So today's winner is Ebube Nachi. If you're still on the show, please DM us your address, and we will be sending you a hardcover autographed copy of the Prosperity Paradox, which Efosa was kind enough to autograph for us. And for the rest of the seasons that we'll run this year, we'll try and make sure that we have a book to go away. Somewhere along the line, we'll figure out how best to optimize it so that you guys give us something in return, maybe drive followership to the channels and blah, blah. But those of you that are getting these early copies, Christmas came early. All right. So congratulations.
All right. Thank you so much, Justin.
Yeah.
So we're logging off now. Victor, we begged you to come on. We are actually in the comments, but we'll catch you some other time.
But, Chief is in the comment section.
Because he made too much money. I'm sure he was just laughing like, don't worry, leave me at my GameStop. GameStop. Take care, guys. I'm getting offline now. We can still stay in the studio if you want, but we're getting offline now. Thank you so much. We'll see you in 2 weeks.